Okay, well, good morning. Thanks for having me, and thanks for the warm introduction there, Alan. What we've got here is a beautiful picture of KZK. To the bottom right is our hard-sided camp. We commissioned that last summer. Just at the bottom of the screen there is our old exploration camp that's been decommissioned. If you look out into the horizon on our road, that's where the ABM and Krakatoa pits are going to be. So just taking a look at what we have here, we're a very high-grade, high-margin polymetallic project. We've been at it for over 10 years at this point. We've put in over 150 million of investment. I like to tell people that we're not a Johnny-come-lately, fly-by-night company. We've had boots on the ground for some time now. With the polymetallics, we have a very strong project. We're 835 million NPV at 7%. That's a 2-year payback. Those are somewhat dated numbers. If you look at spot, we're about $2 billion NPV. A brief overview of the project. So this was actually a Cominco asset discovered in the 90s. It was actually approved and permitted at 1 million tons per annum. When Cominco and Teck merged, ABM was shelved. And at that time, BMC was able to come in. And in the last 10 years, we've taken the project from just under 14 million tons of resource to just under 30 million tons of resource. We have a pre-feasibility study all the way up to a feasibility study, and we're well aligned in permitting. This is what I like to call our existential crisis slide. What are we? Because we're a lot of things. We're presenting KZK on a silver equivalent basis. If you look at the precious metals, we're about 40% precious and 60% base. And just for size of the project, on an annual basis, we're going to be producing about 32 million ounces of silver equivalent. And that pie chart there shows the contribution of each metal. I like this slide because it's KZK on one slide. If you look at what we're going to be producing each year, you've got silver, gold, copper, zinc, and lead. That all rolls up into your 32 million silver equivalent at very high grade, just under 600 grams a ton. I came up in the gold business. On a gold equivalent basis, it's about 430,000 ounces per annum at about 8 grams a ton. So those of you who are familiar with Red Lake, it's essentially Red Lake, but open pit. Again, very strong cash flows. We're looking at about 250 million per year. Again, at spot, that's about 500 million per year. Again, just for size of the project, we're going to be Canada's largest silver mine and zinc mine and a top 15 copper producer once we get up and running. And this slide just shows how dated our assumptions were in terms of what we used for our long-term prices in our feasibility study. You can tell that gold and silver have certainly outperformed over the last number of years here. If you're looking at our site on the front slide, that's from the mining camp south. This picture shows the footprint going the other way. So it's a relatively compact site. For those of you who've had a chance to go there, you kind of get out onto the ground and go, this is it? This is where all this value is being driven from? It's very small. So we're going to have the 2 pits starting in ABM, going into Krakatoa. 90% of the mining is going to be open pit. We've got our plant down the middle of the valley, and then we've got our waste rock storage facilities lining the valley. Again, over the life of mine, we're looking at a strip ratio of just under 10 to 1. It gets a little lumpy in years 2 through 3, 2, 3, and 4, as we lay back into the peak for ABM. Krakatoa, you'll see that it does go underground, and it's open at depth, down dip, and we think there's a lot more there. We're going to produce 3 concentrates, a copper, a high precious metals, and a zinc. And you can see the flow sheet there. It's pretty standard for this kind of mining and processing. Take the big rock, make it into small rock, float it, take the water out, and you've got concentrate. And one thing I do want to highlight is that we've got a water treatment plant, and we're going to have that from day one. And we're also going to have dry stack tailings. The current plan for the concentrate is to haul it down from site south through Watson Lake and into British Columbia. It's about a 900-kilometer haul. And who are we selling it to? Well, we sold the first 5 years of production to Tier 1 off-takers. Glencore's got all the copper, half of the zinc. Trafigura's got roughly the other half of the zinc, and most of the high precious metals concentrate. Getting into capital, we're looking at about a $500 million build cost. Again, along the same lines as our commodity prices. They're a little bit dated, those numbers, but we have looked at them internally. We just haven't published that. It's still in and around that $500 million mark. A couple things I want to note in the infrastructure number. I highlighted the water treatment plant. We're also going to have an LNG power plant. So during construction, we'll use diesel gensets and then transition to LNG as we go forward. So certainly looking forward to seeing how that power line project progresses over the next couple of years here. Looking at our OpEx, so again, this is on a silver equivalent basis. On a C1 basis, we're about $10 an ounce, all in about 12. And you can see the waterfall building up those costs there. So with silver price at about $50 an ounce, that's a pretty strong margin. So where do we go from here? So we've got our technical report, our definitive feasibility study is out there. We're in the middle of a judicial review, so maybe I'll just jump into permitting for those that are not aware of the nuances of permitting in the Yukon. Back in 2022, YESAB reviewed our project on a holistic basis and recommended that our project go into detailed permitting. So the deliverable out of that review is called a decision document. The signatories to that are the federal and territorial governments. So during that period of 2022 to 2025, BMC was able to really progress in 3 key areas that we need the permits on: Type A and Type B water license. Type A is for use of water in the plant. Type B is for use of water in the camp. And then our quartz mining license allows us to go hard rock mining. In 2024, our decision document was challenged by Casca on the basis of economic viability, in that the Casca were not adequately consulted on economic viability. So that ruling came out in December of 2024. Since that stage, we've been going through and supporting the decision bodies and Casca in that consultation. We expect that we will be able to wrap that up in the coming months, and from there get back into the detailed permitting phase. So once we get into that permitting, we're assuming that it's going to take 12 to 18 months to move forward on that. During that time, with this fundraising that Alan commented on, we're looking at a pretty significant drill program over the next 24 months. We're budgeting 40 to 45,000 meters of drilling. We're also going to review our feasibility study, tighten the screws on the DFS, and optimize the plant. We'd certainly like to get our gold recoveries up above 65%. Concurrent with those work streams, we're going to run a construction financing process. We just anecdotally have had unsolicited offers to finance about half the construction costs for KZK. So I'm pretty confident that we will be able to raise the financing for KZK. And that takes us to an FID roughly mid-2027. And then from there, the build will take about 18 months or so and a ramp-up period of 6, getting us to first production in 2029. I do want to talk about the exploration potential. If you look at the ABM and Krakatoa area, that's the existing footprint. In the summer of 2024, we had some very nice drill results come out of 3 areas: Rhyolite Peak, Fuego, and GP4F. And I'm not a geologist, but even I know that Rhyolite Peak looks great from a precious perspective. Fuego, which is just to the south of ABM and Krakatoa, for copper. And then Krakatoa, as I said, it's open at depth, and we think it's going down dip. GP4F, about 5 kilometers to the east of ABM and Krakatoa. The working hypothesis there is that it's analogous to ABM. So we need to put more drill holes into that ore body and determine whether that hypothesis is true. I do want to talk about ESG. I like to tell people that BMC does things the right way, even when people aren't looking. And as a private company, no one's looking. But over the last 10 years, we've invested over $18 million in supporting local Casca through contracts specific to Casca-owned businesses, a scholarship fund, and sponsoring sports teams and cultural events. So I don't know many junior mining companies that are spending that kind of money over that period of time. Looking at our corporate snapshot here, so we have one significant shareholder, which is BMC UK. The money behind that is from a group called GNRI. They hold about 90% of the company. A group out of Australia, which is a family office called Victor Smorgon Group, has about 10, and then Orion about 2%. So the plan is to IPO in the coming weeks here, and with that, Orion will convert their convertible note into shares at a 15% discount. We've put together a new board for BMC Minerals. We've got some pretty big names. Alex Christopher, ex-Tech, 40 years. He actually sold the project to BMC, and now he's coming back on the board. So we're very proud to have the names that we do, and we're excited to go forward. So wrapping up, just want to highlight that we're very high grade, high margin. We're pretty far along in terms of permitting, and this is going to be Canada's next great polymetallic project. Thank you.